I'm back. When people talk about great Indian companies, they usually look at companies which are heavy in technology, finance, or they are startups, or there's some disruption happening. Very rarely does anyone get excited about paints, and yet, if you study long term wealth creation in India, one name quietly keeps appearing, and that is Asian Paints. This company was founded in 1942. Today, it's the largest decorative paint company in India with more than 50% market share in decorative segment. The operations of this company, they span across multiple countries. Tens of thousands of dealers are there and a brand which almost feels permanent. But the reason I find Asian Paints interesting is not because it is big, because it is how it has become big. Not through drama, not through hype, but through bold transformation, through strict discipline, through structural drive. So, over the past 20 years, Asian Paints revenue has grown steadily from roughly a few thousand crores in early 2000s to well above 30,000 crore in recent years. Profit after tax has also grown many times during the same period, and return on capital employed has been above 25% for long stretches. Now, in several years, it has even crossed 30%. Very few businesses can sustain that kind of capital efficiency for decades. And that's not luck. That's because of their structural, drive, the governance that they have. Now, paint industry as such is not glamorous, but it is highly competitive. It has raw material costs that fluctuate. It has deep distribution networks. It's working capital heavy, and it's very execution driven. There is no technology magic here. So how did this company become a compounding machine? Let's look at that. There are a few things which you would like to pay attention to. First thing is the leadership continuity. Asian Paints built very professional management in their early years. It was not a personality-driven company. The CEO transitions were very orderly. Strategy did not swing year on year. When leadership is stable, decision-making becomes consistent. When decision-making is consistent, capital allocation improves. And when capital allocation improves, compounding becomes possible. Most investors underestimate how expensive instability is. Secondly, supply chain. Supply chain's intelligence. Long before digital transformation became fashionable language, Asian Paints invested heavily in their technology for forecasting, their inventory, their channels, etc., their cash sales, etc. Now, thousands of dealers are there in this distribution network. So they maintain strong relationship because of their digital transformation and data-driven replenishment of inventory and better working capital cycles really help them. Competitors cannot replicate this system. But this is not exciting. This is not shown on television. This doesn't appear in newspapers. Thirdly, its capital allocation restraints. Asian Paints did not invest heavily in unrelated diversification. It expanded adjacently. Waterproofing, industrial coating, decor services, always within their strategic logic. It did not chase glamorous acquisition. It did not stretch their balance sheet recklessly and take debt levels to high levels. Their debt levels were very well maintained, so they had a very strong balance sheet. They avoided bad decisions as powerful for making towards good decisions, right? So expanding to their adjacent products. In decorative paint industry, brand really matters. When you repaint your home, you would not like to experiment it. Trust matters. So distribution matters. Contractor relationships matter. Asian Paints protected that brand very carefully, did not dilute it. It did not compete purely on price. That allows margin stability even when raw material prices fluctuate. And here's where valuation comes in. For many years, investors complained that Asian Paints stock was expensive. The price to earning ratio looked very high compared to other manufacturing businesses. But what was the market really pricing? If earning visibility is high, if governance risk is low, if capital discipline is proven, markets assign a premium. And that premium looks irrational to short-term investors, but over a long term, it creates value. It is a long-term value creation stock. But let me shift this conversation a little bit. How do we identify such stocks? How do we identify that Asian Paints is a good investment and we should invest in that? So here's what we look at. We should, personally, actually, I evaluated it as a long-term return on capital. So looking at its earnings for the last 15 to 20 years, I saw that it has earned above 20-25% return on capital without excessive leverage, something very, very structural that they maintained. And secondly, they had revenue and margin stability. While swings often signal fragile models and stability signals systems. Thirdly, their leadership behavior. So management has stayed within a circle of competence. They had very calm transitions. There has been transparency in reporting. Fourthly, capital allocation choices. So one should look at, did the company chase trends during boom cycles or did it stay patient? Balance sheet conservatism really matters a lot. During downturns, does the company survive comfortably or scramble? Now, these signals are not exciting to discuss at social gatherings, but they do separate businesses that survive from businesses that compound. And that's the difference of compounding. That compounding does not look impressive while it is happening. It is steady. It is predictable. It may be even boring. So until you zoom out 20 years later and realize that a boring paint company created more shareholder wealth than many other exciting stories. Asian Paints is not a unique company because it sells paint. It is unique because of its embedded governance, operational discipline, and capital allocation restraint, which is built deeply into its culture. And that combination is rare. Markets rewards rare combinations quietly and over long periods. If you want to build long-term thinking as an investor, study businesses like this, and not to copy blindly with the market, where the market is going, but to understand the pattern, you should look at stability, discipline, patience, and the companies which avoid big mistakes. So four things rarely, these are not trendy, these are compounding. So if this way of thinking about businesses resonates with you, you can subscribe to this channel. And if you want to discuss these ideas in more depth, please feel free to reach out to me directly. And we'll continue breaking down companies like Asian Paints. Earlier I talked about Pidilite in my last video. And we talk about these because these companies are very strong at their governance, their culture, their financial resilience, and capital allocation. So stay in touch. Thank you.